Hey guys, happy Sunday, November 9th. In today's video, we're going to recap the results and my report cards, which you can see on the screen here for all four of our publicly traded cinema companies. We'll talk a little bit more in detail about AMC because it's got a lot more moving parts, a much more speculative play, and I want to just spend a couple of extra minutes talking about that one at the end of this video. But before we get into the report cards, let's just recap a couple of things because look, there are a lot of paranoid conspiracy people putting out content regarding meme stocks. They don't like any discussion that differs with their head in the sand viewpoint, their own poor analysis on these stocks, and their nothing but rainbows and unicorns outlook on these stocks. My approach is a little bit more pragmatic. Let's get one thing very straight here. I am a retail investor just like you guys, paid by nobody. I get my talking points from nobody except my own brain and reading company filings. And then I share my opinions with you. And you know, for the rainbow and unicorn crowd, a lot of times somebody who is giving you a very black and white analysis is going to be upsetting. And I'm sorry for that. But you need to get your head out of your ass and learn to do some proper analysis if you don't want to be in the red on these very speculative trades. We're going to talk about some tough things today regarding AMC, but I've been in the trenches with you guys here every day since 2021. I've been an AMC A-list member since 2021. I've seen almost 100 movies at AMC in the last 12 months, and I will put my record of supporting the industry and going to watch movies up against anybody's on social media, anyone except maybe Mihul. He always beats me every year on going to see movies, but I digress. I might have some different financial analysis than you, and that is okay. The market is made up of people with different ways of analyzing trades. But for those of you that fall into this paranoid conspiracy trap, instead of your little coded messages that you put out on social media, why don't you be a grown-up and I'll extend you an open invitation to come on the channel and have a live talk point by point about everything or anything in this video, anything on the financial statements. You'll find I'm a very rational, black and white person. The numbers are the numbers. It is what it is. I'm not going to sugarcoat the bad things, and I'm not going to hide the good things. There are good and bad. Many of you only will talk about the good, and you're doing a disservice to yourselves and your audience when you ignore the risk side of the equation as well. I just want you to be upfront and be honest. Stop with the rainbow and unicorn nonsense and have an honest dialogue with your audience. It is perfectly okay to be bullish on the movie industry and to support it by going to watch movies. I am bullish and I do support the industry. It is okay to speculate on the stocks of your choice, including AMC, if that is what you enjoy speculating on. And I'm certainly not here to change your mind on that. Do as you wish. But in making all of these choices, I think that we should be able to have adult conversation. The real DD, like this has been lost in this whole meme stock trading community. The ability to have grown-up conversations has been lost by people that want to block everyone that has a different opinion. And I think that is very, very unfortunate to the people that remain in this trade because they get very siloed information, and it's a reinforcement of a one-way view of looking at the stock instead of having a balanced view like a normal person would. Toxic people who spend their entire day insulting, doxing, no actual contribution to the conversation in a meaningful or educational way, absolutely block them to your heart's content. Nobody has time for toxic, negative personalities, but differences in DD or analysis of the financials should be encouraged and celebrated because that is how we all learn. That is how we all grow. To those of you out there just consuming this content, if there is someone that you feel is not providing a balanced viewpoint, I encourage you to ask them to come on and do a live talk with me. They could do a live talk with me on a regular basis. Let's talk about this stuff, because nobody is going to grow or be safe in this investment if honest dialogue is not happening. Now, Q3 for the industry was a tough quarter. $2.36 billion for the quarter, lower than 2024 and 2023. And we know already here in Q4 that October has not been a great month, but here in the last several weeks of Q4, I think that, we're really going to see quite a bit of box office come in, and Q4 is going to be really, really good. I have a template I use to grade any company that we look at regularly here on this channel. It uses a lot of very basic financial income, balance sheet, and cash flow metrics to grade the company. And you get a visual box, red, yellow, or green, depending on how the company is performing. And then we kind of look at the totality of the report card, and that can help you decide how risky a trade is. It's not any instruction for you to get in or to avoid a trade. It just helps you kind of like, oh, well, now I see how this one compares to the other one. If you've been a regular viewer of my channel, you're familiar with these report cards, and we'll get to them in just a minute at the end of this video. I wanted to just talk about a couple of bullet points from each company that, let's start this off on a good foot. For AMC, total revenue reached $1.3 billion despite industry challenges. It even beat my expectations for Q3. That is very good. Record revenue admissions per patron at $12.25, and the second highest food and beverage per patron at $7.74. Adjusted EBITDA of $122 million, beating estimates, and U.S. market share for the quarter increased to around 24%. Also, it is a fact, and I agree with this, that Q4 is expected to be operating and free cash flow positive. And if we look at Q2 and Q3, they kind of balanced each other out to zero. That means that on the last 9 months of this year, that the company, as management has said, will be cash flow positive. That is 100% a fact. It won't be enough cash flow to offset the huge loss in Q1 though. And that is the other side of this coin that no one wants to talk about. Yes, the last 9 months are positive free cash flow, but for a fiscal year, it's still going to be a negative. And we still got to think about Q1 coming up. And I'm not going to let you guys forget about that because it's good to celebrate a positive last 9 months, but we got to also anticipate what is coming up. Celebrate, but anticipate so that you're properly informed and you make good decisions. The bullet points for Cinemark: global revenue of $858 million with 21%. Adjusted EBITDA, they achieved record high third quarter domestic market share, record Q3 domestic food and beverage per cap, fully retired a lot of their debt, $460 million of pandemic era convertible notes and related warrants, all now wiped off their balance sheet. They have no new maturities until 2028. And they announced a $300 million stock purchase program and a 12.5% dividend, increasing to 36 cents annually. IMAX did well in Q3. It was their highest grossing third quarter ever, with global box office of $368 million, up 50% year over year. Record Q3 revenue of $106.7 million, up 17% year over year. More than 30% year over year growth in net income, adjusted EBITDA, EPS, and adjusted EPS. Strong profitability at IMAX with net income margin of 21%. Record quarterly cash flows from operating activities. And after the quarterly news got released the next day or so, they announced that they were doing a new convertible note offering to move the maturities. And that deal is now closed. $250 million of new 0.75% convertible notes, which moves their debt maturities from 2026 out now to 2030. And the final company before we move into looking at those report cards side by side is the Marcus Corp, which, if you're not familiar with them, is a company that owns both movie theaters and hotels. they struggled a little bit in Q3. The movie mix and absence of large tentpole films was not favorable for their market. Total Q3 revenues and operating income were down for Marcus, 9.7 and 30.7% respectively. They did have an EPS of 52 cents, beating industry estimates. And the last bullet point that I want to highlight with them is the bottom one. 9 million in third quarter share buybacks occurred. We love share buybacks. And they announced a expansion of that program. A new 4 million share buyback has been announced, and their total shares outstanding is 23.7. So if they execute on that, that's a considerable share buyback program, and we love to see that. Moving into the report cards, instead of doing these one by one, each as a separate company, let's just put them all up on the screen and look at them side by side. AMC in the top left, Cinemark top right, IMAX bottom left, and Marcus Corp in the bottom right. You'll notice that with the exception of AMC, these other companies are mostly green and yellow. AMC's still got some balance sheet and leverage ratio and cash issues, which are throwing a lot of red flags. It is the exact same grading criteria for each one of these boxes for any company in any industry that I look at. I'm not penalizing AMC. Their results are just not good enough yet to have a lot of green on the report card. Things that I look at and things that I want you to look at to determine risk on a company. Is it profitable? If it's not, that's a red flag. What does the earnings momentum look like? Is it improving every quarter, every year? Is it flat? Or is it going down? If it's spotty, if it's not constant improvement, then you're not going to get a green box. The other 4 items on the top of each report card give us a glimpse into some other very common financial ways of analyzing these companies, looking at things like financial efficiency, liquidity, and solvency. And those items are return on equity, the company's cash position, debt to equity, and working capital. Also, you could call that the current ratio. You cannot just look at cash or current assets in a vacuum. You must weigh them against current liabilities. And if you are not having that discussion with people, if you're not doing that yourself, you are being intellectually dishonest and avoiding talking about some negative things. Current liabilities cannot be ignored when you're talking about current assets. Another thing I look at is the revenue growth trend. Is revenue going up? By how much is it going up? Or is it going down? A lot of these things all put together then help us decide what is the dilution risk for a company. How is management doing is something that I look at. What is the short interest? Is it under 10% or over 10%? If the short interest is high, we should be asking ourselves why. Why are they attacking the stock? What am I not seeing? The final 2 items on each report card is what we maybe call a bonus item. Does the company pay dividends? If yes, they get a green. If not, they get a yellow. And how is the track record of insider trades? Is the company recently, are executives selling a lot of shares? Are they buying, or are they doing nothing? If we see a lot of recent insider trading, getting rid of their position, then that would throw a red flag in this box. We don't have that with any of these stocks recently. We're going to wrap up this video talking about a couple of AMC bullet items, things that I want to communicate to you, things that I think no one else is really talking with you about that should be talked about. And I have my report card here for AMC. You've seen other ones, and other people give you report cards where every box on their screen is green. I'm here to tell you they're not looking at the right things to do a normal analysis. If you have any education at all in finance, accounting, business, you should know which things to look at to determine financial efficiency, solvency, and liquidity. And you should be able to forecast a year out. And I guess if you have some belief that next year's box office is going to be $12 billion domestically, then, that's going to change a lot of the ways that we look at this play. But if you think it's going to be 10 billion, 10.2 billion next year, a lot of these problems that are on this report card are still going to be here next year. They're going to get better, but they're not going to go away. Management knows about every issue on here, and they are very clear with you guys, both on the earnings calls and in the risk factors in every 10Q and 10K, that they are painfully aware of all of these and they are working to fix them. It's why the balance sheet keeps on getting repaired by debt for equity swaps. It's why the company keeps selling shares in ATMs to address liquidity. And you even heard on the most recent call, they said they're going to continue doing that by whatever means necessary. And I think you should be listening to them and take them at their word. That doesn't mean you have to be bearish on the company. It doesn't mean you have to hate the executives. It doesn't mean you need to hate the company. It means that you need to use common sense when you're making your trading decisions, because the people that end up getting burned and burnt out are the ones who never had realistic expectations to begin with, and then reality hits. So to wrap this up, here are my 1, 2, 3, 4, 5, 6, 7 bullet items that I think are important for you to know for AMC. By my analysis, AMC needs somewhere now around $10.5 billion domestic box office to operate profitably on a net income basis. But I'd like to see a box office where we're at least at $10.5 billion to start alleviating some of these problems that are continuing to go on with AMC. So we'll see how next year goes. Quarterly and annual rent expense continue to increase. Now, a lot of these green report card people keep on ignoring the fact that interest expense is going up every quarter. In fact, they're telling you interest expense is going down. I don't like dishonest coverage. Interest expense has only gone up every single quarter since we've been trading this stock. The third bullet item, talking about free cash flow. There's going to be a lot of back slapping and high-fiving when we get the Q4 results, and people are going to say, yes, positive operating cash flow, positive free cash flow. And while they're celebrating, they're going to be ignoring what is going to come in Q1, which is going to be another massive cash flow loss. So I don't look at cash flow on a Q4 basis or a last 9 months of the year basis. That is a distraction from looking at a fiscal year basis. It's going to be negative for 2025. And if my Q1 expectations go according to how I'm analyzing it right now, there's going to be a big negative cash flow in Q1 2026. And I think you should be aware of that as you're celebrating. I'll be celebrating with you. I have some champagne to toast a good Q4, but I'm not going to ignore what's coming up in Q1. AMC has a structurally challenged balance sheet. That's really no secret to anybody, but it doesn't get talked about enough. The company has negative working capital. People talk to you about, oh, look how many current assets AMC has. And then they stop the conversation right there. Whereas if they would be intellectually honest with you guys and say, like any person trained in finance, business, or accounting, we have current assets, but we also have current liabilities. And when we add them together, we have a negative number, negative almost $1 billion of money to pay our bills over the next 12 months. Let me repeat that. Negative almost $1 billion available to pay the next 12 months bills. People don't want to have this conversation with you. I'm not scared to have an honest conversation with you. And I'm going to encourage you to encourage these people to have more honest conversation. Get them talking about working capital. Get them talking about current ratio. Because if they're not doing it, they're diluting themselves and they're diluting you. And I don't like that. Management is very aware of the balance sheet problems. They talk about it in every earnings call, and they are working. They are doing the work. They're doing their job to improve the balance sheet and to improve the leverage ratios. And that work will continue, and that is going to mean significant dilution risk, either through debt for equity swaps, or if there's a liquidity shortfall, ATM offerings. I can't predict when or how frequent or how much, but I do know that management has said by whatever means necessary, they are going to continue addressing the balance sheet and the leverage ratios, and you better be paying attention to what they're saying. The cash on AMC's balance sheet is at a level so low, we haven't seen this since 2019. And in my mind, liquidity remains a concern and therefore box office growth is paramount. In a slow quarter, liquidity is something that you need to be paying attention to, because I can guarantee you the CFO, Sean Goodman, is paying attention to it. And I want to be thinking like the CFO as I'm planning my trades. For those of you that regularly watch my channel, everything we just went over is no surprise to you. And you're very comfortable in being in this trade and understanding this stuff, or being out of the trade because of this stuff. And that choice is always up to you. My job is not to influence your trading, but to cover the stock just like I do every other company in this industry in a non-biased and unemotional way. I am sorry if some of these things don't fit your preconceived notions, but they are the same things that the company talks about, the same things that are covered in the risk factors in every company 10K and 10Q. And if you don't agree with any of these things, again, you have an open invitation to come on my live stream. We'll get you on camera, we'll get you mic'd up. From your remote location, I'll send you an invite and we'll talk through whatever your concerns are. I'm happy to do that. And I encourage you to reach out to me if you've got a green report card on AMC. If there's no yellow and no red in your life, I want to chat with you. Come on the channel. Let's talk through this. Maybe you can still teach me something. I'd love to have that conversation. Guys, thank you for watching. I'm Tony Denaro. I will see you on the next video.